Hey traders, Todd Gordon here with TradingAnalysis.com. This is going to be your free video update for Thursday, July 23rd. And we are going to pick up where we left off here on July 8th in the SPY. Okay, I spy, as the title of the video suggests, I spy with my little eye support in the SPY. Can you tell I'm a dad now with all these cheesy little nursery rhymes? So the video we were working back on July 8th is right here. We were looking for support in the SPY around $204. I'll go ahead and link you to the video right above if you want to review that one. Since then, the market has moved up. We rallied all the way up to 213. We're now pulling back. We're right in the middle of earnings season. Is it a time for concern and panic? Let's take a look. I'm going to go over here to the 60-minute chart, blow this guy out a little bit. And I've done the work ahead of time just to save you some time on the video, but I'll explain what I've done here. On using eSignals Advanced Get here, they've picked up a first wave, a second wave, a beautiful third wave rally, and now we're pulling back in a wave 4. Okay, so the first thing that we're going to do to figure out should we panic or is this a buying opportunity is do some Fibonacci analysis of the prior waves and apply them to our current wave, which is wave 4. So the first thing we're going to do in red, using your retracement tool, which is right here on the eSignal platform, is you're going to click the beginning of your third wave up to the end of your third wave. Okay, your 38% price retracement is there. Your 50% is there. The 618 was down here, but I took it away because it is no longer valid, or it's not valid because it's below the wave 1 high. And in a good impulse move, this correction should not move into the territory of this second wave. So anything below this $208.10 mark is invalid. So your retracements give you the 38-50% price retracement as support. The other way we're looking at the fourth wave is looking at distance travel in the prior corrective wave, which is wave 2, and apply it to the ongoing fourth wave. You have 100%, which basically means distance traveled in wave 2 equal the distance traveled in ongoing 4 at 209.23. You also have the 1272 extension of wave 2 and 4 down here at 208.15. Let me also get the 618 in there and see if that's going to be applicable. Close. We're a little bit through it. It held it eventually, but we're through it. So I'm going to focus on the support zone down here in terms of price. Now, we talked about the y-axis. What about the x-axis? What about time? Okay, so what we did here was we took a time study of the third wave. So starting here all the way up, the time extension here tells us it's 56 bars, which is 56 hours. And then you multiply it by your fib ratios, just like we did on the vertical scale. Let's do it on the horizontal scale. We can figure out not only where this is going to stop, but when. Okay, that's really important, especially for you options traders. So if we do a 38% time retracement, 56 hours times 38% is going to give you a potential support on July 23rd at 3 o'clock, which is 2 hours from now. That time zone is going to last all the way out to the 618 time retracement, which is going to be July 27th at 2:30. Okay, so that's going to take us into next week. So we have an agreement of price and time right here in the support zone, right? So where is it? Right here, my best weatherman impression, okay? The upper price and upper time is going to be today at 209.78, and then the lower price and time would be $208.15 on the 27th out at around 3 o'clock towards the close. All right, guys, so look for support. There's a variety of ways you can play this. If you're options traders, you know, obviously with the stock market pulling back, volatility is going to be up, so you could sell puts below the market. You could do a put spread below the market. Or if you want to be a little bit more directional, you could buy calls, you could buy the SPY, you could buy S&P futures. Back to option trading, if you want to do a debit spread, you buy at the money calls, and then you'd have to sell your upside objective. How do you figure out what your upside objective is? Well, you go up to the MOB, the make or break tool here, and you just click the most recent swing high, and it just very quickly gives you your price and time target right around $215. Right out towards the end of July. So if you want to do a debit spread, you'd be buying right at the money calls, 210s, 209s, sell your upside objective around 215. You've got a $5 wide call debit spread. All right, guys, good luck. Hope that helps. Watch for that support zone. Oh, and I almost forgot to mention, where are we wrong? You always have to have a stop in right below the wave 1 high because that's the point where this trade is no longer valid. No reason to stay in. Stop yourself out. And 208 call it 208 even's a good stop, and that's the plan for today. If you'd like to be notified when these videos come out, go ahead and click the yes, I want to be updated button up there, and you can subscribe to the YouTube channel. If you enjoyed the video, as always, please hit like. It really helps us out, and I love getting the likes because the content rises up in the YouTube community, and we're getting more feedback. If you have questions, comments, insults, whatever you want, throw them down in the comments section. I'll be sure to answer them. Thanks, guys, very much, and we'll talk to you in the next video update.